Hi everyone, welcome to the accumulation data analysis for 29th of July. After a pretty decent break, I'm again doing this. Hopefully, I'll be continuing it for some time, right? So let's get started with the analysis. Let's look at the global markets. So the global markets, especially the US, it had a pretty decent pullback after reaching, let's say, 41,000, 41,500. From there, it kind of corrected quite decently and it kind of took support around that breakout level that was there below that 40,000 mark, and from there it has again started to reverse. So let's see, because day after tomorrow, that is on 31st, the Fed will finally, high chances, probably 50-50 chance of it cutting the rate, but definitely in September market is hoping that the rate cut should come in because the inflation data has cooled off in the US and looks like the Fed will finally cut its rates after probably 2 odd years, right? So let's see, the market is anticipating a minimum of 3 cuts this year, that is almost 75 basis points kind of cuts, which should come in, and the market is rallying on that hope. So that should be clear by 31st, and after that, the market will adjust itself accordingly. Right? So now coming to what the FIIs are doing. So as you can see, after 23rd of July, the FIs were heavily short. So they were selling in cash market. They had short positions even in the FNO market, probably a bit to do with the budget, as well as they were anticipating not such great GDP numbers from the US economy, and also they were little worried about the inflation. Because the inflation came in quite low and also the GDP numbers were very strong, you see that on Friday they kind of bought in the cash market and even cut their shorts in the FNO. That kind of made the Nifty rally almost close to 400, or a little higher than the higher than 400 points in one single day. So that was because of they cutting their shorts and also they buying in the cash market. Today there was quite a decent dip that kind of came in around that 1230 mark. All of a sudden, bank Nifty lost close to a percent. Even Nifty went into the red. It again came back, but we kind of ended flat, to be honest. Let's see how today's data will be. Today's data is not out yet. Once it is out, I would be in a position to analyze and tell you what exactly they did in the cash market as well as in the FNO market. Are they cutting their shorts, or they have again started increasing their shorts, right? But if you look at the Nifty 100 equal weighted index, more of a spinning top here. Probably it might do a retest of this breakout that happened recently, and from there we might move up. Because if you look at the momentum is increasing from the last, let's say, 2 3 days. The momentum has been continuously moving higher. So chances are we should see more momentum coming in, the Nifty moving even higher, right? But all depends on what happens on 31st, that is what the Fed does. And if you look at the data, so very similar to Friday, that is on 26th, we are seeing very good accumulation even today. So very similar buying numbers might come in from the FIs is what I feel, right? So if they are buying in cash, probably they would be cutting their shorts in the FNO market, or let's say taking on a few long positions as well. Now coming to the mid cap analysis, right? So if you look at the chart here, that is the Nifty 500, especially the broader market, like most of these from 101 to 500 stocks, most of them are mid caps, if you ask me, right? Because more than 15,000 crores is their market cap as of now. So you can't really consider them as small caps anymore. So there also, it is more of a spinning top kind of candle. So chances are it can also do a small retest, that is probably on one more day of pullback, and then it moves up, because probably next 2 days there might not be so much action because we have the Fed meeting on 31st, right? Until then, I don't think the big guys are going to go all in. Probably after that, the real strong up move might start if there is positive news on the rate cuts, right? So if you look at the momentum from the last 4 days, you can clearly see that there is an increase in momentum. Stocks have been moving up. So usually in this kind of market, when the momentum is increasing, as a trader, you would want to come in and play, right? So you have to first decide whether you are an investor or a trader. An investor would want to look at the valuations, fundamentals, and stuff, and then play. But as a trader, all that matters to you is momentum. So whenever the momentum is very strong, you would want to latch on to that particular opportunity and make money as there is very strong momentum. As the big guys push it up, you would also want to make money along with them. So this is the momentum, mid cap momentum continuously increasing for the last 4 days. And also, if you look at the data, even the data is showing very good improvement in accumulation. So what is happening? Momentum also increasing, accumulation also increasing. The big guys are buying it and pushing it higher. So you would definitely want to play this kind of market because these kind of markets make a lot of money, right? So as a trader, best time to be playing this market. Now coming to the small cap accumulation. So even in small caps, if you look clearly for the last 4 days, the momentum has been continuously increasing, right? So the momentum has been increasing, and even if you look at the data for the last 4 days, there has been a gradual improvement in the data, right? Somewhere close to, let's say, the uh, average we have come. So this is, many people have asked me what are these numbers. So on the left hand side from 0 to 250, what you see, those are the number of stocks, and at the bottom that you see, so there you see from 3rd July, so 3rd, 4th, 5th, so the first part is, first half is July, and the second half where you see 2, 4, 8, 10, so that is July, right? So right now I'm looking at the last 2 months and seeing how the data is in the last 2 months, how it is, and comparing it with whatever data we have for the last 2 months. I'm not comparing it for, let's say, year on year and stuff. It is the current situation, what exactly is happening. So that based on that, you get to know how the big guys are positioning themselves. So as of now, the data is improving along with improvement in momentum. So these kind of markets, as a trader, you would want to play with your stop loss probably around the swing lows. You would want to keep and play this market, right? Now coming to the distribution. So in the distribution, you can see that there is a small bump up that has happened. So usually what happens in the market is not all stocks, all sectors run at a time, right? You would have seen this already. So most of the times, few sectors would get distributed. The same money keeps rotating in different sectors. So another sector will get that money. So that particular sector would see accumulation happening. So once the money is removed from here, so you see these stocks in distribution, and the other set of stocks where the money is moving, that particular sector, those particular stocks would see good accumulation and they start moving up. So that is the reason it is not like one, when you see low accumulation, that means distribution is happening. That need not be the case. It is not inversely proportional, right? So there is a small bump up. Maybe a few sectors are getting distributed where there was high euphoria also. So you would want to concentrate on those stocks, those sectors where the accumulation is good, and play those names, and you should make decent money in the coming days. I think this rally is going to continue for a few more days, few more weeks also. So let's see, until the data supports, the momentum supports, you would want to play and make money with the big guys. Hope this helps. Probably I'll be making these videos continuously now, and it also helps you guys in making decent decisions and money as well. Thank you.